All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I mentioned I would just jump on if we saw some 3-7 crossovers this morning that triggered. And we're not seeing any that are triggering. We're seeing a lot of 3-7 crossovers. But with everything going on, I want to jump on and go take a look at a few things here with you. Let's start with let's just start with the market in general. All right. Market in general, we have. I'll just zoom in on S&P futures since 3 o'clock my time, 5 o'clock Eastern. You can see the downward trajectory. But since the market opened, right, and market opened here at 7:30 my time, right here, right, market hasn't gone anywhere. Market's about the same level. Yeah, it shot down and shot back up and shot down and shot back up. But we're not exactly seeing massive selling pressure beyond the gaps come into play, and that's a very interesting thing about markets. And when we go and we look at the sell-off that happened not too long ago, and we were running a challenge during this, and we had some good success, but it wasn't exactly fun every day. You take a look at this period right here in May, right? You say, well, yeah, of course things went down, but how many red candles do you see there? One, two, three, four, five, six, right? And most days were down, but most days gapped down and then rallied off of that gap. And I'm very interested to see if we don't see some of that type of action here into the end of the year, or if we see the gap down and sell, or like yesterday, small, just kind of the small gap up, or pre-market up, and then just all the sell pressure come in. Now some of that has to do with the timing of news, right? But it's also one of those things where, and we talked about it back here in May, where yeah, the market's selling, but it's selling. It's S&P futures. It's driven by overseas markets, not by the U.S. market. And a lot of times when we see that, we see a rally back to new highs. Yeah, okay, fine, pullback, and great. We've talked about that risk and that potential, and there's still more of it. But the way that it goes down, I think, is going to be very telling into how next year kind of kicks off and how next year starts. And so far today, we're not exactly seeing massive sell pressure come into play. You take a look at something like the IWM, it's kind of the same thing. You take a look at something like the FXI, it's kind of the same thing. Most of the major ETFs are about that same thing here. And again, we're only an hour into the market, so I'm not going to read too much into it, but we're not seeing a lot of sell off of the gaps here this morning. And so we could still see the market down, significantly, and break on down with some further sell here. But, at least so far, we're not seeing the gaps sold off, in a very hyper aggressive type of manner. You look at the stocks that are down the most, right? Most of them have to do with a trade deal with China, right? And you look at Caterpillar, or you look at some energy names, you look at those types, some of the semiconductor stocks, they're getting hurt the most. And then outside of that, we're seeing financials get dinged pretty big. And yesterday, financials held up and rallied. And I was asked if that meant that, hey, financials are out of the woods here and they're just going to go up. And I said, no, I don't think we can say that just based on yesterday's outperformance. They did give up a little bit into the close, but yesterday they rallied on a kind of a strange move in the TLT, where bonds around the world, sold off, and rates, rates fell essentially, or rates rose essentially, and now this morning, we're seeing them pop right back up. And so the banks are getting the sell pressure that they probably deserved yesterday, and things like Bank of America, J.P. Morgan, are getting that sell off here this morning. So it's one of those where do we see any major levels come in here for the market? We did see a 30K volume candle come in about 15 minutes after the market opened. What was that? 15, technically 17 minutes. But when we're talking about massive volume candles and them having a significance, generally I want to see that happen after the first half hour to an hour. After the first hour, I like to see them. They're much more reliable, like yesterday, and saying, bottom's in or top's in or something like that. And this one right here could suggest that bottom is in, but the probabilities are significantly less than what we saw yesterday with the high volume futures candle. Now, as I mentioned this morning, I want to see. Okay, yes, we're going to have a lot of downside 3-7 crossovers, and here's the list. It's huge. But what I want to see are these stocks suggesting further breakdown and further downward trend, or is this simply a product of a 2-day sell-off in the market, type of thing? And so far, and obviously the morning parameters are significantly tighter, but so far, no new signals, on the board. But, if you look, it's just pretty much any sector, any industry, it's here. Right, we even see the SPY has a 3-7, downside crossover on it here today, and we could see several of these turn into signals by this afternoon. If you take a look at something like an Amazon, it has potential. You come through here, a FedEx has potential, an FCX has potential, right? But some of these, they've made 2 average true range moves in the past 24 hours. To get to these levels. So, they're just not going to trigger at that. But others, no. Others are very kind of normalized moves. A Nike here, strong potential of a signal here today. So we do have some signal potential on this board. Nothing, right here, right now. U.S. Steel has an interesting little cross down here. AK Steel was bought out here today by CLF. CLF, there we go, Cleveland Cliffs. Now you see CLF dropping and AKS, rising here. But, that's not really affecting U.S. Steel very much, here with some of the consolidation in the industry. But anyway, it's a fairly large list. Ford, several others on it. But are we really seeing sell pressure today, or is this simply gap and spin type action? So far, it's gap and spin type action, and it's not very far away from being gap and buy action. With how things sit. So, do want to see it play out just a little bit longer and, see what these signals ultimately turn into here. And we'll go jump in as these signals emerge and become playable here for us. All right. One last comment, market metrics. It's way too early in the morning for me to really kind of buy into any sort of market metric shift, right? But we are seeing the bullish percent index pull back. And, this is, we talked about the bullish percent index pullback about a week and a half ago, and that kind of being one of the first warning signs. Well, we're getting a secondary pullback on it right now. Nothing that's bearish confirming or anything like that. But this is now a market where when it's down, the bullish percent index is going down. Before, over the last 6 weeks, it has been a market where even when it was down, the bullish percent index was going up. And that has shifted. That has changed, and I think that's very noteworthy and something that the bulls have to understand, and gives the bears a little bit of courage here. Thanks for hopping on. Have yourselves a fantastic day. We'll talk to you this afternoon. Take care.